Very good evening, everybody. Welcome to Pathfinders Trainings. I'm Yogeshwar Vashishtha. Can all of you hear me properly and see the screen properly? I welcome you to the training. I'm live with you from Mumbai, guys. Just give me a confirmation that you can hear me properly and you can see the screen properly. Thanks, Rajesh, Ashish, Javeer, and I see people have joined from various cities. This is an advantage of online. You can interact from anywhere. So great. People are still joining. So this is a 2-hour session in which I'll be introducing the stocks, futures, and options market to you. In the end, I'll have a 15 minutes of a question answer session. Whatever queries you have, you can write them in the chat window. I can see them. Whatever you're writing in the chat is visible to me only, so you can freely write to me on this one here. Okay, normally, let's see the profile while people are joining. How many of you are absolutely freshers? You have not done anything into the stock market. Say yes if you are a fresher. Okay, that's a lot of freshers I have. Shiva started a month ago. Great. So I have freshers, quite a few. Then, how many of you have traded futures and options? Right? Right options if you have traded options in your trading career, just to know how many of you have done some options before. So Vishal has done options. Venu has done, but he lost 4K. Shiva did Nifty, Bank Nifty. Himanshu Sahu says I've traded options but without anything. Okay, a lot of people have traded futures and options, but they say that they have made losses here. Sorry for your loss. So loss is also a challenge into the market if you don't know what to do here. So great, guys. So since there are a lot of beginners in the class, few people are trading options. Is it okay if I start from absolute basics, absolute zero? Anyone, the people who have done options, they've mostly made losses. Fine. So I'll be starting from absolute zero. Welcome, everybody, guys. I'm Yogeshwar Vashishtha speaking to you live from Mumbai. And let's start. Stock market is a risky place, so come here fully prepared. This is my trading room in Mumbai, guys. I stay in Hiranandani Estate, Thane City, Mumbai. And every professional trader will have his trading room. This is my trading room. I love to read, so my trading room is full of books. So, and this is my 5-screen setup. So on one screen, executions are done. In another screen, the major news is going on. And on the 2 screens here, the charts are open. And that one is another extra screen that I have. So this is my 5-screen setup. This is the back side of my trading room. I love books. This whole section is full of stock market books, stocks, futures, options books, all that. And I don't put the books inside the bookshelf till I have finished them. So I love to read books, and I spend at least about 2 hours in a day reading a book. It can be a physical book, a audio book, it can be an e-book. So I love reading books. This is the stock market cycle, guys. Stock market goes up, comes down. That's how the market behaves. It moves up, downs, and crashes are regular part of the stock market. We have with a crash in 1992, Harshad Mehta's scam when the market went down 54%. 96 went down 40%. 2000 was the technology meltdown, 56% correction in the market. 2008 was the worst correction that we had. 61% the market went down from the high, then went up. Then the market went down 28%, then went up. Last year itself during COVID, the market crashed 40% down and then recovered back. So up and down is the normal trend in the market. And these are your various investment vehicles, guys. Stocks, high returns, liquid. This session is about them. Then another place where a lot of people park their money are FDs, company deposit, government deposits. What are the returns your FD is giving you, guys? What are the yearly returns your FD gives you? Yeah, share your returns with me, please. 6%, 5%, Vinod says, Jairam says 6%, 7%, 5.75%. So the 5-6% is the average return that your FD is giving you. And what is the inflation rate in India, guys? What is the rate of inflation in India? It's also 6% to 8%. So if your FD is giving you 6% per year returns, and the inflation is also 6% to 7%, what is the effective return of your FD per year, guys? What is the effective return of your FD per year? Isn't it 0 to negative? That is 0 to negative. Very good, Mithilesh, Asim, Babbar, and others. Great. So, these banks and FDs, they can be a temporary place to park the money at the most. As a wealth creating vehicle, they are useless. They are useless as a wealth creator. You can park your money temporarily there. Then there are mutual funds. There are more than 1,000 mutual funds in India. The average returns the mutual fund have given is between 8 to 12% a year. Last year was a little better. Then real estate, historically it was very good, but after demonetization, real estate as a investment vehicles have gone down now, and in most of the cities in India, the real estate prices are going down. Not only that, you require a lot of money to buy real estate for investments. Gold gave good returns last year, but on an average, gold has given 6 to 8% returns. And in the last 1 year, it has given negative returns. From 57,000, it is down to about 47,000 now. Cash doesn't give you anything. So if you want to generate regular incomes, if you want to create long-term wealth, you will have to look at the stock market seriously. You have to look at it seriously. And you have to take it as a profession, a proper profession. Now, when you come to the stock market from various routes, this should be your expectation. When you are building a portfolio of stocks, you should be getting returns 24% per year, at least 4 times more than the FD. And if you're doing intraday and swing trading using futures and options, you should be generating about 10% a month on your capital. This should be the expectation from the stock market. It is a reasonable expectation. But tell me, will you make this money just by opening a trading and demat account and putting some money into your trading account? Will this money automatically come to you? Yes or no? No, of course not. It will not come to you. Because how will this money come to you? If you have the skill of trading and skill of investing. If you have the skill of trading and investing, then only this money will come to you. So the key word here is skill. The key word here is skill. Now, what is skill? Skill is transfer of knowledge from conscious mind to subconscious mind with practice, practice, and practice. Now, how many skills were you born with, guys? Himanshu Sahu has said a good one. He said we need to grind and hustle for it. Okay. Yeah, how many skills were you born with, guys? Chalo, let's go to the skill part now. Vishal says nothing. Yes. How many skills were you born with? Yeah, very good answers. We were born with zero skill. When you were born, we had no skills. And thanks to our parents, we started gathering skills. You got the skill of walking, the skill of talking. Then they give you the social skills. You went out in the world, you got the skill of playing a game like a cricket or a football, skill of riding a bicycle, skill of playing a piano, skill of swimming, multiple skills. Then you went to schools and got more skills, skills of reading, skills of writing. Then as you grew up, you started gathering professional skills like skill of becoming a doctor, engineer, coder, manager, banking guy, chartered accountant, and many other skills, doctor. In fact, the first 25 years of our life are spent only in gathering skills, and the rest of our life we utilize those skills. Do you agree with this statement of mine, guys? 25 years we gather skills, and the rest of our life we utilize those skills. Correct? That's what happens. Stock market is exactly the same. You will first spend about 3 to 6 months gathering the necessary skills, and then rest of your life you will earn money from those skills. So today I'm going to talk about those skills that you have to go for. So a few things before I start. I do not handle anybody's money. I have no software to sell. I do not have a tip service. I do not have a system or a method by which you will become rich in 24 hours, 2 hours, or 3 days. I'm a full-time trader now, started as a part-time trader in investors and into the market for 20 years. And I know that it is hard work by which money is to be earned no matter where you go. And whatever I have learned so far, that's what I would like to share it with you. So, are you okay with that, guys? No shortcut to make money here. No handling, no software to sell, no gimmicks. That's how I'll be starting. I'm an IITian and I have done it the hard way. But one thing I can say for sure is if you work hard here for 3 to 6 months and you give it your 100%, your next generation will not have to do a job. Let's go further. Another reason why you should think seriously about stock market as a profession is, you know, first of all, it gives absolute freedom. No need to travel anywhere. Nobody to report to. Nobody reporting to you. You know, don't have to manufacture anything. You do not have to give any service or product to anybody. There is no recession in this. The whole world is suffering from corona. All the countries are in lockdown stage. Tell me anywhere in the world, did the stock market close down? Yeah. Think and tell me. In the last 1.5 years, anywhere in the world, has the stock market closed down? Yes or no? So there is no recession in this business ever. And there is no retirement here. I have students under me who are 18 years old. I have also students under me who are 70 years old. It's an amazing business, but it requires your commitment. Let's go and start learning about it. Let me first introduce you to your friends in the stock market. Now, this is the Indian stock market of the last 20 years. Guys. This is the Indian stock market of the last 20 years. Look at this chart and tell me in how many directions does the stock market move? Yes. In how many directions does the stock market move, guys? Very good. It moves in 3 directions. Very good. Those who said 3 directions, Javir Kera, Mithilesh Patil, you are right. Market moves in 3 directions: up, down, and sideways. The market moves in 3 directions: up, down, and sideways. Like, for example, let me show you a different chart. This is the Indian stock market of the last 30 days. This is the last 30 days of Indian stock market. Tell me now, looking at this chart, in how many directions does the stock market move? Correct? But you can't see it more. It moves in three directions: up, down, and sideways. So, professional trader and investor trains himself to make money in three directions: up, down, and sideways. The market will not move according to you. You will have to learn how to move according to the market. Now, your first friend, like my first thing that you will be doing here is you will be building portfolios. Now, what is a portfolio? Portfolio is a basket of stocks, about 20 stocks, which you buy and hold for many years, and they give you returns, of more than 24%. Now, if you have to find out, like if I go here in this, let's see, HDFC, ICICI Bank, these are all companies delivering goods and services. Now, if you have to find out what was the profit or loss, or what is the performance of HDFC Bank, Reliance, Tata Steel, Tata Motors, where will you look at? Where will you look at? There's one other thing, this session is being recorded, and I will send a recording of the session to everybody. So, no need to take notes, focus on the content, and I'll be sending a recording of this session to all of you. Okay, very good, Jairam Bangaswamy, balance sheets. So your first friend in the stock market, your friends. Let's come to your friends. Your friends, your first friend in the market is your balance sheet. Balance sheet is your first friend in the market. Okay, I give you a choice. I give you a choice to buy either Yes Bank, Reliance Industries, Tata Motors, or Chamanlal Shethia. Which one would you buy? I repeat, for your portfolio, I give you a choice to buy either a Yes Bank or a Reliance Industries or a Tata Motors or a Chamanlal Shethia. Which one will you buy? See, most of the people have answered Reliance and Tata Motors. This is the answer most of the people have given: Reliance and Tata Motors. Now tell me, all those who have said Reliance and Tata Motors, some of you have even said, Yes Bank. Why did you give this answer? What is your reason for giving this answer? Think and tell me. What is your reason for giving the answer? Now, Rajdeep says growth. Okay, then, yeah, think it strong. Shilva says strong balance sheet, good balance sheet. Now, Mithilesh Patil, answer me one thing. Have you really seen the balance sheet? Yes or no? All those who said good balance sheet, have you checked the balance sheet? Now, everybody say yeah. Yes. Should we go to the balance sheet? Let's go to the balance sheet. Let's see what is the real truth. Now, I go here. This is the Corona graph, guys. Very scary. Take care. Get your vaccine fast. Let's go to the first one, Yes Bank. This is the balance sheet of Yes Bank Limited. And this is the net profit per share of Yes Bank. In March 17, Yes Bank used to make a profit of 72 rupees per share. 2018, it dropped down to 18 rupees per share. 2019, 7 rupees per share. March 20, it was making losses of 13 rupees per share. And in 2021, just this month, results have come. It is still making a loss of 1 rupee 38 paisa per share. Tell me, looking at this, would you like to buy Reliance Industries, this Yes Bank, for your portfolio now? Yes or no? So, based on what did you make your decision? Is it because I said it, or was it based on the facts that I showed you? Yes. What helped you to take the decision? Shiva Shankar says facts. Mithilesh says facts. Okay, now let's go to the another one, Reliance Industries, a big name. Okay, Reliance Industries Limited. Look at here. Last year, Mr. Mukesh Ambani was selling parts of these companies to the whole world because they were in heavy debt. Let's look at the facts. In March 17, Reliance was making a profit of 96 rupees per share. I'm on moneycontrol.com, the most authentic place. Then in March 18, the profit reduced to 53 rupees per share. 1955 rupees per share, March 20, 48 rupees per share, and in March 21, net profit per share is stagnating still at about 49 rupees per share. Now, looking at this, would you like to buy Reliance Industries, hoping to get returns of 24% per year for the next 10 years? Yes or no? I'm showing you the facts, guys. No emotions, no favorite stock, nothing. Stock market is mathematics. Stock market is facts and figures, right? Many people might be shocked, but these are facts. Now, let's go to another one. If I go to another one here, Tata Motors. Look at Tata Motors. March 16, losses. 17, losses. 18, losses. 19, little profit. 20, losses. And in 21, results have not yet come. It would still make losses. So, this is definitely not a business that will give you returns for about 24% per year. Tata Steel is a little better. Now, this is, if I go to Chamanlal Shethia, let's check out Chamanlal Shethia. Chamanlal Shethia, just let's try to find. Chamanlal Shethia's financial ratios. Let's check out. This is not opening, but I'll tell you. Anyway, it's not opening somehow here. See here? I can see it here now. Look at Chamanlal Shethia now, guys. Earnings per share 8 rupees, 8 rupees, 6 rupees, increased to 10 rupees. So out of all these, which one would you prefer to buy for your portfolio now? Chamanlal Shethia on an average has gotten about 40% returns per year for the last 5 years. So, when we are coming to the stock market, you cannot take your decisions based on your notions, how you feel. You will have to take your decision based on the facts. So, your first friend to build long term portfolios is the balance sheet. So, the balance sheets have to be learned. It takes about 3 months to learn properly the balance sheet so that you can build a proper long-term portfolio. And balance sheets keeps on changing every 3 months. A new quarterly results comes, and you will have to look at the balance sheet from a very different perspective. A second friend of yours is a technical chart. It's a technical chart. Like this is a technical chart. What is a technical chart? A pictorial representation of price. Like this is a 20-year candlestick chart. On the x-axis is the time, on the y-axis is the price. The most basic chart is called line chart. This is a line chart consisting of closing prices. This is a bar chart consisting of 4 prices: open, high, low, and close. Then this is a candlestick chart consisting of bodies and wicks. Heiken-Ashi chart consisting of 8 prices. This is the Renko chart, which is an execution chart. Similarly, charts exist in multiple time frames. This is a monthly chart consisting of 1 month candle. This is a weekly chart where every candle represents 1 week. This is a daily chart where every candle represents 1 day. And this one is an intraday chart, which can be a 5-minute chart, 10-minute chart, 30-minute chart, 60-minute chart. So these are the intraday charts that you are looking at. So, and these charts will have 2 components. One are components above, which can be Bollinger Bands, they can be channels, they can be trend line, they can be support and resistance level. Then on the lower side of the chart are oscillators and indicators. Oscillators and indicators, they tell when the markets are overbought, when the markets are sold, when you should enter, when you should end. In fact, a technical chart is the map of the stock market. If you know how to read a technical chart, you know exactly where to get in and where to get out. So this is your second friend, the technical chart. And your third friend is a risk profile. Your risk profile. Tell me, when you go to a mall where there are various kind of shops, can you buy everything there? Can you buy everything there? Can you afford everything in that mall? Yes or no? Yes, guys. Can you? Yeah, I'm just asking a simple question. It's the same in stock market. In stock market, when people come, they have different levels of skills. They have different amounts of money. They have different goals. They have different risk capacities, which means if you want to enter the stock market, the first thing you have to know is what is your risk profile. Have you done your risk profile test so far, guys? Do you know your risk profile? Exactly when you start into the stock market, what is your current risk profile? And for your ideal returns, what should be your risk profile? I bet the answer is no. So your 3 friends in the stock market are balance sheets, technical chart, and your risk profile. So, and what are your enemies here? Your enemies. Your first enemy in the stock market is your emotions. Your emotions. When you become too emotional into the market, you have very rigid views, you will lose money. Your emotions are your biggest enemy into the stock market. Your second enemy into the stock market is looking for a shortcut. It is a profession. There is no shortcut here. It takes time to learn it. But once you learn it, you can make money for yourself, teach it to your next generation. They don't have to do a job. So looking for a shortcut. And your third enemy into the stock market is dependency on others. Dependency on. Now, another thing that you have to keep in mind is that you will never be in your control here. Now, on Monday morning, do you know what price the market will open at? On Monday morning, do you know what price the market will open at, guys? Yes or no? No, even I don't know. Okay. But then somebody would be knowing, somebody would be in control, Otherwise, the market won't have open. So, who controls this market? Now, the question is, who controls this market? Who controls this market? Somebody must be controlling. Now, this market is first controlled by FIIs, foreign institutional investors. Now, you'll be surprised to know almost 50% of the money that flows in the Indian stock market every day comes from outside India, from the foreign institutional investor route. Like, for example, if I go today here on this, let's say money control global indices. So see here, I go down here. I see today here, FIIs were net sellers for 1,142 crores. In fact, this whole month, they have sold for 3 days and bought only for 1 day. And this is a DIIs. They bought for 1,468 crores. They're net sellers for 2 days. So the first major player who controls the market is FIIs. The second major player who controls the market are DII. The major first one among them are insurance companies. Biggest player in the Indian stock market is LIC of India. The kind of returns they give to you are 4% per year. The kind of returns they make from the stock market are 10% per month from the options and the futures. Insurance companies. Then the third major player in the Indian stock market are the mutual funds. There are more than 1,000 mutual funds in India. They collect money from people and invest it into the market, so they control the market. Then the fourth major player who controls the market are the banks. The public banks and the private banks, they control the market. So FIIs, insurance companies, mutual funds, banks. So they are the one who control the whole market. Then there are intermediaries like corporates and the big brokers, but these are the one who control the market. They are creating the market. Now you have two choices. Your first choice is to fight with them every day. What is your chance of winning from them every day? Yes, what is your chance of winning from them every day, guys? Think and tell. Zero. Correct answer is zero. Zero chance. Fine. Another choice you have is to find out what are these market makers doing and do the same thing. If you know what are they going to do and do the same thing, what are your chances of winning, guys? Low or high? The chances of making profits become very high. They become much higher. So that is what professional traders do. We do not try to beat them. We can't. They're the market makers. They can't be beaten. We want to know what are they going to do and do exactly the same thing. And where will you know what they are doing? On the technical charts. On the technical charts, you get to know what are they going to. And that is what technical analysis, risk management, psychology of trading, and the balance sheets will help you. So they control the market. So what are the markets they control? Now, what are the markets? What are the markets? The first market is the stock market. Stock market, consists of more than 5,000 stocks. It opens at 9 in the morning, closes at 3:30 in the afternoon. Mostly stocks are traded here. Second market, much, much more popular than the stock market, is the derivative market. Derivative market consists of futures and options, about 160 Stocks and derivatives are traded on the Indian stock market. The turnover of the derivative market is 100 times more than the turnover of the stock market. In fact, it is the derivative market that controls the stock market. Then, the third market that is traded in India is the Forex market. Forex market is where you trade currencies. USD INR pair, Euro INR pair, British pound INR pair, Euro USD pair. So this is the Forex market. And this market exists because the different currencies of the world have different valuations. As their valuations change, this market is created. So this is a Forex market. And the fourth market that exists is the commodity market. Commodity market. It consists of gold, silver, crude oil, natural gas, and the five metals like copper, zinc, aluminum, and others. So you can trade these four markets in India. Commodity market is open till 11:30 in the night. 11:30 in the night. This market is now in these markets. What can you do? In these markets, you can do four types of trading. You can do four types of trading. Four types of trading. The first type of trading, one of the most popular, is called intraday trading. It's called intraday trading. Intraday trading is one-day trading. When your trade lasts for a single day, it's one of the most profitable styles of trading. And every professional trader, part-time or full-time, engages in intraday trading. Now, let's do a comparison. If I put 10 lakh rupees of mine into the FD, how much will the FD give me per day? If you put your 10 lakh rupees in your FD, guys, how much will the FD give you per day? Just make a guess and tell me. I'll do the calculation for you. Now, 10 lakh into 6%, that is 60,000 rupees in a year divided by 365 days. So your FD will give you exactly 164 rupees per 164 rupees per day, not 1700 Asim Babbar. This is the calculation. On a 10 lakh rupees, your FD gives you 164 rupees per day. On 1 lakh, it is just about 16 rupees per day. When Venkat says 15 per lakh in a day, very good, Venkat. So now, is this a very attractive money? Is this a very attractive money? Yes or no? Of course. Now, I'm a professional trader. I do it for a living. I'm also a coach. I teach people every day. So, when I have two trading capitals. One is a trading capital of a few crore rupees for my personal trading. And other is a trading capital of 10 lakh rupees for intraday trading and swing trading, and a trading capital of 50 lakh rupees for building portfolios with my students. So now, let's see, I trade every day. Let's see my today's trades. Like today, on my 10 lakh rupees, I booked a profit of 6,302 rupees. I didn't even use the full 10 lakh rupees. I utilized about 7 lakh rupees out of the 10 lakh rupees. So I made 6,302. So 6,302 divided by 165. That means today I made 6,302 divided by 165. I made 38 times more than the. This is the potential of this market. This is the potential of this market. And in my options trading, I made an extra 8,496 rupees. And I still have a swing trade going on, in which right now my running profit is 11,722 rupees. And in this one, I have a target of a profit of about 25,000 rupees on a deployed capital of about 5 lakh rupees. But then you cannot get this from stocks. Here I'm trading an entirely different product, which is called futures and options. So this is the potential of this market. Example, this is a 7,000 rupees of profit. I'll open the trade log of this 10 lakh rupees. See here, with this 10 lakh rupees, today I booked of 14,000 rupees of profit overall. Yesterday, 4,000, 10,000, 6,000. You can see here, and every day is not a profit day. There are loss days also. Loss and profit both are going to happen, but you have to ensure that your profits are bigger and your losses are smaller. I'm trading now for more than 18 years now. And this is what I'm making roughly about 18% a month on my capital, doing intraday trading and swing trading mainly with futures and options. This is the potential. So, when you are going for intraday trading, it is an extremely profitable, but then the skill level required is amazingly good because you're dealing with derivatives here, which are very fast moving products. The second form of trading is called swing trading, where your trade lasts for about 10 days. Where your trade lasts for about 10 days and you aim to catch about 5 to 10% movement in the stock. Like example, this trade that is going on, which I'll be carrying, is a swing trade, which is going on for almost 5 to 6 days now, and it will finish next Thursday on expiry. And I'm aiming for about 25,000 rupees of profit on a 5 lakh rupees of capital. So that is about a return. So what is the return I'm aiming for? I'm aiming for 25,000 rupees on a capital of 5 lakh rupees. That is a 5% return. And a 5% return in how much time? In about 10 days. That means in a month, with 20 trading days, I'm aim at about 10% returns in a month. Out of the 25,000, I have already got a 11,000 rupees of profits. It's an amazingly profitable style of trading, but somebody has to train you properly. Many of you have tried on your own and you have burned your hands because you were not trained properly here. How many of you have made losses in intraday and swing trading, guys, especially with futures and options? Say yes if you have had losses. See, many of you. I'll not put your names here, but that is because you are dealing with products which are very high profit, but they are also very high losses. Okay. The third form of trading is called positional trading. Positional trading, where your holding period with stocks is about 3 months to 6 months. Positional trading. And the last form of trading is portfolio building. Portfolio building is your holding period is in years. For example, this is a summary of the 50 lakh rupees portfolio that I built with my students here. Last year, on this 50 lakh rupees, I could book a profit of about 21 lakh rupees, 42% returns in a single year. And this year, in about 4 months, I'm still making about 8.6%, a 2,38,000 rupees return. Then you get dividends, you get bonuses, and you get splits. So your long-term wealth is created by the portfolio. So the key is to learn short-term trading, generate incomes there, and transfer it to a long-term portfolio. And for that, you need to be skilled. You need to be skilled. These are the four types of trading. Now, there are three products. There are three products to be traded. So I'll come to that now. Let's understand what products to trade and what products to trade. The first product to trade is called stocks. Stocks are used mostly for positional trading and portfolio building. Only novices use them for intraday trading. Stocks are vehicles which are non-leveraged vehicles which are primarily used for positional trading and portfolio building. Now, the limitation with a stock is it is unidirectional. Can give profit in up direction only. If the market goes down, you will lose money. The second product, better than the stocks, is called futures. It's called futures. Futures can give profit, can give profit in two directions, up and down. Up and down. And the most versatile of the products and my favorite product for doing all intraday and swing trading is options. Now, the beauty of options is it can give profit in three directions. Three directions, up, down, and sideways. And stocks and futures have only direction. They have got only one component, which is called direction. But in options, you can make money from three things. In options, you can make money from direction, you can make money from time decay, and you can make money from volatility change. It's a pure mathematical product. Anybody who of you would have tried trading options without understanding the maths behind it would have suffered very heavy losses. It's a purely mathematical product. For example, if you're seeing here, I'm already doing swing trading here in my options. And if you note here, this is a controlled product. This is a controlled product. The trades I'm taking in this particular strategy that I'm working on is neither uptrending nor downtrending. I'm neither long nor short. I am directional neutral. That means I will not make money by the market going up or the market going down. I'll make money from the time decay and from the volatility, and I have the maths behind it. My M-Tech-IIT helps me a lot here. If you have to trade options, your maths needs to be good. So these are the products that you can trade. Let's take an example here. For example, today, even though the market went up, Tata consumer product Bajaj Auto went down. So let's check out here. Let's see. Bajaj Auto. Bajaj Auto went down. It didn't go up, it went down. Bajaj Auto here, if you see here. So In Bajaj Auto, if you were having stocks, you would have lost money. But if you were trading a derivative, Bajaj Auto, if you're trading a put option of Bajaj Auto, instead of losing a 1.9%, you would have made a 26% positive returns in a single day. It is very common for an option to become double in a single day. It is also very common for an option to become zero in a single day. It is a very, very fast moving product. These are the products that you can trade. Are you liking the session so far, guys? Okay, let's go a little deeper now on this. We still have one more hour. So half the time is finished. We still have an hour. Now, everybody will be getting a recording of this session. Now, if I go here, I want to find out like, look at this market and tell in this market, can just anybody make money? Look at the market now and see, can just anybody come here and make money in this market? Yeah, only a professional one. Only it's an extremely volatile market. It's an extremely volatile market that we are looking at here. So, how will you make money? How will, because you have to build portfolios also, you have to create daily incomes also. So, how will you make money? How will you make money? And the answer is by understanding the 9 dimensions of the market. You can make money by understanding the 9 dimensions of the market, and the money can be really fast here. For example, let's just pick up one. Let's see here. This is a classical example, old one, just to give what is the potential. Now, here, the IPO. This is a IPO I was trading of CAMS and ChemCom. And here, we had planned for a profit. The planned profit in the trade was about 3,000 rupees. Capital put into the trade was about a lakh of rupees, and the planned profit was about 3,000 rupees in the whole day. That is what we were working for. But then sometimes the market is very kind, and if you see here in this one, I'll just go. The stop loss get taken away. Downside, what was our 15 more? I'm taking profit of 15 plus. I think there's a profit of 19,000. So you see this in this trade, I made up instead of making a 3,000 rupees profit, the boom was so much on the downside. I made 19,000 rupees, and this is a gift the market will give you once you know what you are doing. Whenever you are entering into a trade, let's go here. There will always be four results, whether you are doing a short term trading or a long term trading. There will always be four results: big profit, small loss, and big loss. If I tell you profit and loss, which one is in your control, guys? Out of these four, which one is in your control? Profit or loss? Which one is only loss? Exactly. Very good answers. Only loss is in your control. Please remember, Profit is a gift from the market and loss is something that you take. And there are two kind of losses that will come. One is a small loss, one is a big loss. Rule number one, rule number two, and rule number infinity is never take a big loss. So all those who lost money in the stock market, did you allow your small loss to become a big loss, guys? Did you allow your small loss to become a big loss? Yes, exactly. That's what happens. Not only that, sometimes you allowed your profit to become a loss. So the key is, let's go back and check this trade log. In this trade log, it is not that I make money every day. I do make losses, but then I count it. See here, I have now profit days, loss days, but I ensure with my skill and practice that I have 8 winning days, 1 losing day. I have 5 winning days, 1 losing day. Your losing days have to be bigger and your winning days have to be less. On a 10 lakh rupees, if you can make 5,000 rupees in a day, you will make lakh rupees in a month, which is 10% a month return, and you will double your money in a single year. Double your money in a single year. That's how it works, basically. So, that is the key that you're looking at. Now, how will you ensure that you understand this market before you commit your hard earned money into it? That is by understanding these 9 dimensions of the stock market. These are the 9 dimensions of the market: price, fundamental technical mismatch, candlestick patterns, volume, open interest, volatility, momentum, multiple time frame analysis, and sector rotation. Let's try the first one. Let's go to the first of the dimensions, the price. Now, the market might look very random to you, but it is not. Market is not random at all. This market is mathematics. Now, let's check out here. Let's start from here. In this one, I'm adding a balance line. I'm adding a balance line in this one. This is a balance line. And if you go here, let's check out pendulum. Now, let's go to the very basic pendulum. Like, I'm a student of physics and mathematics and chemistry, love math. So here, what is the basic principle of a pendulum? The basic principle of a pendulum is this is the pivot. When the pendulum is moving on the upward side, the kinetic energy is converting into potential energy. At one stage, there is an inflection point, it turns back. Then the potential energy converts into kinetic energy, goes on the other side, and the process continues and continues. And eventually, the pendulum will come back to the pivot, the central point. Let's go and look at the stock market where I put a balance line. This is the balance line. This is the balance line we are looking at. So, what does the price do? As the price goes far away from the balance line, you see, comes back to the balance line, goes far away from the balance line here. What does the price do? Price becomes imbalanced. Price becomes imbalanced. The moment it becomes imbalanced, it again starts coming back towards the balance line, goes to the other side. See here, goes to the other side, again becomes imbalanced, starts coming back towards the balanced line. Then, again around the balance line, then again moved far away from it. And as it moved far away from it, it again became imbalanced, started coming back towards the balance line again, became imbalanced. So remember, keep the pendulum in your. So what is there? It's the pendulum. The kinetic energy turning into potential energy turning into the kinetic energy. Now here, if you see on the other side, went on the other side, and then if you saw, this is price again went to the other side, become imbalanced, comes back to the balanced line, and then here was one of the biggest opportunities, the Corona crash. So this was the Corona crash when the market crashed down almost 40%. One of the biggest imbalances the market created. One of the biggest imbalances the market created. And what did it do? Same that the pendulum does. These are stock market. It doesn't matter. They are used to wars. They are used to pandemics. They are used to politics. They are used to economic upheaval. Stock markets are used to everything, and they have survived everything. They exist for thousands of years. So they are always there. So here it becomes imbalanced. Again came back to the balanced line. Now here if you see, now what did the price do after that? Price went on the other side. Has become imbalanced now. Going further up, becoming more imbalanced now. So around this level, the price became hugely imbalanced on the other side. What is the price doing? You see, the price is now slowly coming back towards the balance line. Now tell me honestly, guys, in the last 5 minutes, have your eye of looking at the price changed forever? Yes or no? Stock market is just mathematics. Stock market is not emotions. It is not speculation. It is not gambling. It is pure maths. It is all probabilities. Okay? It is all probabilities. So now, but this is not just one method of finding balances and imbalances. So if I add the studies here, see, these are so many methods by which you can find the balance and the imbalance: accumulation, distribution, volume, ADX, ATR, average, Bollinger Bands, candlestick, CCI, CMO, Donchian channels, double average, average, Gann-Hilo, the Ichimoku curves. Now, if I add into this, let's say I take this away, take this off, and I say now I'm looking at the stock market from a different eye altogether, and I add here a Japanese method called Ichimoku on this. Apply. See, now it's an entirely different way of looking at the balance and the imbalance. This is called a Ichimoku club. Now tell me, for in against the traders who are trade into these for months and years, if you come to the stock market with your money untrained, do you stand a chance? Very frankly, do you stand a chance? Yes or no? Now, the second question is for you. If you take the trouble, spend the money, commit the time, and work hard, and learn this in 3 to 6 months, tell me, the other people who come in front of you, do they stand a chance against you? Now, the second one is more important. Do they stand a chance against you if you get trained? And mind you, very few people in the stock market take the trouble of getting trained. And that is the challenge that you will have. Get trained, learn it properly. To become a doctor or an engineer, did you get the skill from the books or did you go to a college, guys? Where did you get it from? Of course, from the college, from your professors, from your practical training. Similarly, in stock market, you'll have to apply yourself, learning from somebody, from me or somebody else. But you will not be able to do it on your own. You'll have to reduce the curve. You'll have to reduce the curve. And here we are just looking at the first dimension of the market. The first dimension of the market is the price. Now, there is the second dimension of the market called a fundamental technical mismatch. What is a fundamental technical mismatch? Now, a classical example of a fundamental technical mismatch at this point, as I see, is Reliance Industries. We saw the balance sheet of Reliance Industries, guys. Was it a strong balance sheet or was it a weak balance sheet? Was the balance sheet strong or weak of Reliance, guys? Remember, I showed it to you. I'll again show it to you. It was a weak balance sheet. This was the balance sheet of Reliance. It was a weak balance sheet. Now, if the balance sheet is weak and the price of the stock goes up, it creates a fundamental technical imbalance. Let me add into this a very simple balance line again. And shift it to Reliance. Let's change the script to Reliance. Reliance Industries. Now, this is a classical one. This is Reliance Industries with a weak balance sheet. So Mukesh Ambani is selling his company, taking the price up. Around this level, he has sold most of the stake at a higher price. And then what is this? This is a fundamental, this is not only an imbalance, it is a fundamental technical mismatch. And here, if you see, what is the price doing? Price is coming back towards the balance line. If you see here, price has touched the balance line. And during this time, market was actually moving up, but Reliance remained weak because of the fundamental technical mismatch. High and a lower high. If you look at Reliance, because of the fundamental technical mismatch, is weaker than the market. And I won't be very surprised one day it will come down and fill this gap at 1,250 rupees. That looks to be the likely target for Reliance, 1,250. So this we can use two dimensions now, the fundamental technical mismatch, and the balance and the imbalance. This is the second dimension. The third dimension of the market is candlestick patterns. This market is like this is one example of. This is a recent one. I was just trading it in my live trading. I was trading it. I would prefer to finish. Nothing to do. This is 29th April, last week's trade, where I was working on a hedge trade, you can use Renko 754. Renko's club. We have a meeting. See here. This was a trade going on, and it gave a nice profit of about 11,800. And on that day, I finished with a profit of about 24,000 rupees by evening by understanding the candlestick pattern. We were trading gaps. We were trading the gaps in this market. So that is the third dimension of the market, which is called candlestick patterns. Then when you're trading options, especially, you'll have to master the volatility and the open interest. The volatility and the open interest. For example, how many of you have traded a Nifty before? How many of you are Nifty traders? Nifty or Bank Nifty? Say yes if you have traded Nifty or Bank Nifty before. Many of you have said yes. Vinod, Ashwin, Ravi, Kanak, Vishal, and many. So now let me introduce you to an entirely different dimension of the market. This is the option chain. This is the option chain. And option chain is controlled by option writers. Most of you in options are option buyers. Profitable trader is an option writer. Okay. So here, with this option, it takes months to master this option chain. And here, if you master this, it tells which side the institutions are building positions. Most of the big institutions, the banks, the FIIs, the DIIs, the insurance companies, they are not option buyers. They are option sellers. Your chances of making money by option writing are 100 times more than your chances of making money by option buying. Tell me, all of you who lost money in options, were you options buyers or were you option sellers? All of you are buying. I can bet all of you were buying. Each one of you was a buyer, right? So you have to know you can be buyer of options only in 20% of the situations. On an expiry day or a result day or in very specific situations, when you get a signal, 80% of the time you have to learn to be an option writer. So, and a good professional options and futures traders knows how to be a combination of this, and you cannot be successful in options without understanding this dimension, and this is a pure mathematical dimension. No chart, no graphs, nothing, no levels, only numbers. You have, by understanding these numbers, you will know which level the market will go till. Will it go up? Will it go down? This is an entirely new dimension of the market that takes time, but once you have this, it gives you the edge. So you need to have an edge, guys. यदि आपके पास edge नहीं होगी, if you are earning a salary of more than 2 lakh rupees a month in your office, do you have an edge? Your edge could be education, your edge could be a skill, or your edge could be something that other person can't do. Say yes if you agree with me on this. Correct? Exactly. And in the stock market also, you will have to find your edge. Please understand, हर एक को सेम चार्ट दिखने वाला है, हर एक को सेम भाव दिखने वाला है, हर एक के पास पैसा है, हर एक के पास ट्रेडिंग अकाउंट है, हर एक के पास ट्रेडिंग, इनफैक्ट everybody has the same thing. Everybody has exactly the same thing. So why will the market give money to you? Ask the simple question, When I have the same thing that everybody else has, why will the market give money to me? The market will give money to you when you have the edge. And the edge will not come automatically to you. You will have to create that edge. It takes about 6 months to 1 year to create that edge. The next dimension is volatility. Now, there is a index called volatility index, called VIX. This is the volatility index of the Indian stock market. Let me go here now and show you something interesting. When the coronavirus happened last year, see corona crisis, my average monthly returns are 20% a month. But in the month of March 20, April 20, and May 20, my returns become 57%, 46%, 33%. On those 3 months, I made an average of about 45% a month. Why did I make almost double of regular? Because of volatility. If I add here on this one, let's see here. This is the month of March, April, May. What happened to the volatility? The average VIX range is 10 to 30. And there VIX went till 80. And what are the three components of an option? Direction, time decay, and volatility. And the volatility got compressed and you could mint money out of it. There's another dimension of the market. Then other dimensions of the market are momentum, multiple time frame analysis, and sector rotation. Right? Money keeps on moving from one sector to another sector. Like lately, these days, everybody wants to buy Tata Steel, Hindalco, and others because they have gone up. Now, if I look at metals, now this sector has moved up this is a huge rally that has happened in this sector. It's a big rally. And now everybody wants to buy it here. Now this is the time to get out. Sell greed, buy fear, because money will now very soon, in the next 2 months, start flowing out of metals and move into another sector. And you have to know from which sector the money is moving in and from which sector it is moving. That is another dimension of the market that you have. So these are the 9 dimensions of the market by which you can do these 4 forms of trading. Intraday and swing, mostly done with futures and options, and positional and portfolio, which is mostly done with stocks. These are your choices. Stocks. What are stocks used for? They're used to build portfolios. That's the only purpose of stocks, to build portfolios, your long-term portfolios. Then stock futures, index futures, stock options, index options, commodity futures, forex futures, they're used for intraday and swing trading. Now, futures and options are very special products. They are very special products. In this, you can trade 3 directions: up, down, and sideways. And the beauty of options is they give you a 50 times leverage. What does it mean? With a 1% move, you can make a 50% profit. They can be used for hedging. They can also be used for income. And since it has got 3 dimensions, direction, time, and volatility, you can design custom strategies in this. And you can predetermine your profit and losses. And that's why futures and options are mostly used for intraday and swing trading. Stocks are mostly used for building long-term portfolio. You should be proficient in both. What is the primary difference between options and other assets are based only on directions. Options have three ways to make profits: direction, time, and volatility. This is the skill set required, guys. Stock selection with fundamental analysis, chart reading with technical analysis, stock filtering to find high probability trade. You cannot look at 5,000 stocks. So you should know filtering mechanisms. It takes about 10 minutes where you put in your condition and you can do a filtering on the stocks. Since each one of you has a different risk profile, you should be proficient in risk management methods, mastery of online platforms. How many of you have this thought in mind or this notion in your mind that to do intraday trading, you have to sit in front of the market for the whole day? How many of you have this in your mind? Because that is not right at all. In fact, if you are sitting in front of the market for the whole day, the only thing you will get as a free gift from the market is losses. Because a market moving up and down will just make you emotional. Most professional traders try to stay away from the market as far as possible. That's why this profession can be easily practiced while doing your job. Let's see an example. Let's say I have identified that metals are expensive, so I pick up, let's say, Tata Steel and check Tata Steel. I go to Tata Steel, pick up Tata Steel, which was 7% up today, and I go on a daily chart of Tata Steel and I add here a very simple MACD. Moving average, convergent divergence, another way of looking at balance and imbalance here. And I apply it here on this one. And I check out this. And apply it further. I add into this one more tool of MACD histogram. So here, I did not find a trading opportunity, so I go and start looking at various metals. Okay. So go here, various metals which are expensive now. And start looking at the ones which have started giving, and I see here in this one, I have the signal. The signal is very clear that MACD has gone below zero, crossover has happened, trade is there. So here in this one, my trade is identified. So here in this, I say I'll enter the trade not here, but on Monday, the moment it goes below this, I'll enter into the trade. It has gone below the gap. Put a stop loss, roughly about half an ATR up, and for a target where the move started. So in here, my reward to risk ratio is, if I'm right, I'll make 3.6 rupees. If I'm wrong, I'll lose only 1 rupee. So my reward to risk ratio is very high. And here, in this one, I decide to go short on 1,000 Adani Enterprises. And I don't have to wait for Monday morning. I can place the trade into my system right now. In fact, you can put your trade into the system 24 hours, 7 days a week. 7 days a week. Now, if I initiate this trade right now, put it into the system where my entry is predefined, my stop loss is predefined, and my profit target is predefined, is my physical presence required in the market? Yes or no? Think and tell me. Of course not. In fact, if you are sitting in front of the market for the whole day, you don't know trading at all. आपको ट्रेडिंग से कोई लेना देना नहीं. Most professional traders works on their levels, work on their strategies, and they spend more time finding the trades and very less time looking at the market. Looking at the market continuously is like planting a seed into the soil and opening it up to see if it has grown or not. So, you need to have high probability trading setups, trading plan aligned to your personality, rational decision making training, money management methods, and managing your emotions and your subconscious mind. Okay, guys, I've been speaking to you for almost 90 minutes now. Let me introduce myself in brief before I go further. My name is Yogeshwar Vashishtha. I'm a civil engineer by profession. I've done my M-Tech from IIT Roorkee in 1989, my international certification in management from South America, Peru, and my advanced courses in trading and investing from Pristine Academy of USA and other places. I have three phases in my trading and investing career. One was I was a part-time trader from 2002 to 2006. From 2000, and at that time I was an NRI working for a multinational called Skanska, engaged in hydropower projects in Sri Lanka, Sweden, Norway, and South America. Then second phase is after I came back to India and became a full-time trader from 2007 to 2010. And then from 2010 onwards, I became a trading coach and a professional trader. In introductories like this, about 2 lakh people have been trained. In my main courses, more than 5,500 people have been trained. So, this is my M-Tech degree, guys. I'm very proud of it. This was my place of working, Skanska. I was working on hydropower projects. I'm a civil engineer. My trading career started in Sri Lanka as a part-time trader, getting trained under Jeffrey, my first mentor. Then I got transferred to South America, Peru, working on the Yungan hydropower project. There I enrolled myself for an online course of Pristine Academy. That was the turning point in my life. Trained under them for about 4 years. And by 2006, I was making about 10% a month on my capital. And I knew this was a serious profession. From there, I was transferred to Scotland on a hydropower project. But I decided to come back and become a full-time trader. So in February 2007, I came back to India in Mumbai, became a full-time trader. Then 2008, the market crash. I love when it goes down because you can make tons of money from options. So 2008, my trading capital became more than a crore of rupees. And I knew this profession was for real. Then I was personally trading till about 2009 on my own. From 2010 to 2012, I was associated with this international group of traders. This was a huge opportunity and learned so much from them. Some of the top traders of the world. Utterly thankful to them for teaching me wherever I am today, right now. It is a huge contribution from them. Was with them for about 2 years, and big capital requires very specific strategies, and I learned it from them. So thank you to this group in August 2012. Started working on a mentoring model of my own. This is my company, Pathfinders Trainings. This is John Bollinger, inventor of Bollinger Bands. Started preparing a mentoring model of my own. This was my first batch of 35 students that was launched in 2012. After that, about 125 batches like that were passed out, mostly in Mumbai, some in Hyderabad, some in Bangalore, some in Delhi, but 80% in Mumbai. And about 5 years ago, the course became totally online. And now people get trained under me from all over India and other parts of the world. I'm married. Let me share with you my little on the personal. This is online, guys. That's my wife, Dharmishta. We are married for about 26 years now, and blessed with two boys, Vedant and Siddhant. Just a minute. Here. This is my younger son, Siddhant. He studies in Purdue University, USA, doing a double major in data science and computer science, and he's a trade options trader. He can create strategies and automate strategies. Then I stay in Thane City, Hiranandani Estate, Mumbai, guys. So let me show you some photographs. Yeah. This is my house in Mumbai, a small family gathering here. I love to travel. These are both the boys. The elder one is Vedant. He's doing his last year of computer engineering in Chicago. And from next year, he's planning to do his master's, and then he plans to become a full-time trader. This is with Shamak Dawar. He has written a book called The Laws of the Spirit World, and that became our connecting point. This is the James Bond Island. I love to travel. I try to take at least one international vacation per year. And stock market as a profession allows me that. I don't have to ask any leave from anybody. This is Italy. And I think this is a family picture in Germany. I think this is Munich, guys. There's more on the personal front. Let me tell you how you can be trained to become a professional trader and investor. I run 3 courses. I'll introduce you to them. The aim is that you have to learn how to build and manage your own portfolio, make money with intraday trading, catch market swing with swing trading, and trade leverage assets and make money when the price goes down. These are the various batches that have passed over the years, guys. Now the training is totally online and you can do it from anywhere. Initial about 125 batches. The classes used to be physical, but since everybody couldn't come to Mumbai, demand was huge. Now the courses are totally online. The first course is a 3-month course, guys. 3 months online stock market training with live trading and mentoring by me. The courses are taken by me. I have an able team of 20 people who will be there to support you. The Fees is 29,000 rupees all inclusive. It includes the software on which I was giving you a demonstration, live trading practice with me, you know, and credit card EMIs are available. This is how the course runs. The 3-month course, you first go through an orientation session of 3 hours under me. Then you go for a 1 month of portfolio building and a technical analysis training, of 30 plus hours. After that, for 2 months, you do a live trading practice with me 2 times in a month, first and third Wednesday of 6.5 hours. All live sessions are recorded and recordings are also sent to you, which will remain with you for the full period of 3 months. So, 4 live practice sessions with me with recordings. Then there'll also be 4 live learning sessions, which will be in the night, second and fourth Thursday for 2 months. Then every Friday, you will receive important topic sessions. So you'll get 8 recorded sessions. And then every Thursday, there will be a mentoring session in the afternoon in the live market. Then I'm available on the WhatsApp, and in the evenings, your education manager will be there to help you. So this is the 3-month course, and on my website, pathfinderstrainings.in, EMI facility is available. The 3 months EMI would be 9,900 rupees a month. Interest cost to the bank is about 728 rupees. No paperwork has to be done. We have done tie-ups with the banks. This is the first course. The second course is a lifetime of a stock market training and mentoring, where you're not trained for 3 months, you're trained for life. It's a lifetime online training with live trading and lifetime mentoring by me. That is 47,000 rupees all inclusive. Credit card AMI is available from 3 months to 12 months. And in this course, the orientation session is there. 1 month of portfolio building and technical analysis is there. After that, the live trading practice, instead of 2 months, it is for 12 months. Instead of 2 months, there's a live trading practice for 12 months, which is 24 sessions. Live learning session is also for 12 months, which is 24 sessions. And then important topics are for a whole year, 48 sessions. And then the Thursday sessions never finish. They are for life. 12 to 1 every Thursday for life. 4 live sessions per month for life. And in this course, you are taught how to build portfolios, how to do intraday trading, swing trading, trade futures, options, commodity. It's an overall course where you learn everything. And this is the EMI. The 12 months EMI here is about 4,000 rupees a month, and the interest cost is about 3,900 rupees. And these courses are designed for the working professionals. So you can easily do this course while you are doing your jobs. The third course is after doing these 2 courses, 3 months or lifetime, you can make your own portfolio, do intraday trading, long and short, catch market moves, swing trading, trade leverage assets like options, make money when the price goes down. Then I have another course which is specially for futures and options only. These are for people who only want to specialize in futures and options, in which you are learning these asset classes in detail. Day 1 is concept learnings, strategies and trading methods. Day 2, day 3 is strategy building and trading in live markets. So after you go through these 3 days of recordings, then you get 36 online live trading sessions with me of 1 hour each, 3 times a week, in which you will do live strategy building in options with me. Intraday, weekly expiry, monthly expiry option strategies, result days, and more than 30 strategies You will be practicing with me directional, neutral, and directional. You know? And many of you have portfolios, but you don't use the portfolio to make money. It is like having a house, but not giving it on rent. This is a specialized course. If somebody wants to learn only futures and options, this is 54,000 rupees all inclusive. Credit card EMI is available for 3 months to 12 months. A 12-month EMI is about 4,800 rupees a month. Interest cost to the bank about 4,400. So these are three courses that are available. You can choose any. Okay. And after the training of futures and options, you can trade directional, neutral, optional, directional, earn money by selling time, earn money by trading volatility, make approximately 5% a month almost risk free from directional neutral trading. Directional neutral trading, the hit rate is close to about 80%. I'll just give you the trade log of that. This is the trade log of directional neutral trading that I practice every day on about 10 lakh rupees of capital. And on my 10 lakh rupees, I make about 66,000 rupees a month, which is averaging about 6.6%, success rate almost 80%. So that is what this course is here. And for these courses, you can pay on my website, pathfinderstrainings.in, a credit card, debit card, net banking, wallet on GPay and cash card. EMIs are available. Okay. These are the list of banks for the credit card EMI. If you have credit cards of any of these banks, you are eligible for EMI, and today you're also eligible for a special offer. Now, this is my offer for you today. This offer is for the first 10 payments. First of all, don't pay the full money now. I don't need the full money. We need to talk to you. We need to talk to you first. So today you can pay 1,000 rupees of refundable advance. It is totally refundable. If you don't want to go ahead with the course, just tell your education manager and he will refund your money back to you. So what you pay me today is 1,000 rupees of refundable advance. After you have paid the advance, tomorrow your education manager will give you a call and ask you what training do you want to go for. You tell him what training do you want to go for, and whatever training you want to go for, no interest to be paid on EMIs. EMIs are available. If you're going for a 3-month course, you get 3 EMIs. Interest will be borne by Pathfinders. You don't have to pay the interest. If you're going for a lifetime of a course, the 12 EMIs you will be given of credit card, and the interest will be borne by Pathfinders. For 4,000 rupees interest, we will bear, you get 12 EMIs. And if you're going for the futures and options training of 3 months, you still get 12 EMIs, and the interest would be borne by Pathfinders. But this is for the first 10 payments. Today you cannot pay me full money. You only pay me 1,000 rupees refundable. Talk to your education manager tomorrow. And once you have talked to him, decide which one you want to go for. Then you pay the remaining money. A course starts every Sunday. Every Sunday a course starts. Basically here. Where can you pay your 1,000 rupees? Let's go there now. This offer is only for the first 10 payments, guys. Only the first 10 payments get this offer. After that, the regular price applies. So to give me the 1,000 rupees advance, go to my website, pathfinderstrainings.in. I've changed the domain from .com to .in. So this is my site, pathfinderstrainings.in. Here. And in this, click on paid trainings. So you will go on this one here. You will go on this. And this first link is the 1,000 rupees advance. This first link is the 1,000 rupees advance that you can pay. But to pay the 1,000 rupees advance, you have to do a free registration first. Do a free registration, and then you can start paying your 1,000 rupees advance here. And if you want to pay by Google Pay or Paytm, you can pay on my number. When you will pay, you will see my name. So 1,000 rupees refundable advance for any of the courses. You tell your education manager tomorrow what course do you want to go for. You can pay on this number of mine, 9967070595. This is my Google Pay and my Paytm number. So today you can pay 1,000 rupees fully refundable advance. Talk to the education manager tomorrow and decide what course do you want to go for. Tell him. And in case you don't want to go ahead, just tell the education manager your 1,000 rupees would be refunded back. So, yes, guys, you can start doing your payments now. Just 10 seats in the offer, and this is the offer.